Microsoft with partial information, and I did this on purpose. Even though it was a loss, I kind of wanted to show, it could have easily been a gain as well, but I wanted to show you a method in trading that's really important, which is basically that if you do an analysis where you end up changing your mind, which traders have to do every day, it's really, really, really important to quickly change your position. You know, a lot of people, when they get new information, they want to stick to their old opinion because it feels better. Um, am I short Microsoft? Ooh, shoot. Put 100 shares, right? Oops, 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 oops. Thank you. That was a mistake. And of course it went up. I thought there was something wrong. Let me make a new column here. Well, let me get out of it first. That's the key. When you make a mistake in trading, that's the other important thing to do. Thanks for pointing that out.
Order filled.
Okay, now I'm out. So I lost $62, $61. The $50 came by accident. The $10 was intentional. Oh well. Anyway, point is, it feels much better emotionally and mentally to try to kind of convince yourself that you're right. And that's maybe the way most financial mistakes are made. And I know that sounds crazy, but it's true. So many financial mistakes are made that way, where people just don't want to admit they're wrong. You know, if you get some new information, for example, you're convinced that, I don't know, let's go to the t-shirt store again. You're convinced that the t-shirt store stock, wow, t-shirt store stock is a great investment. For whatever reason, you think it's a fantastic investment. And you buy stock in this t-shirt store, and the reason you think it's a great stock is because you like the CEO. And then the CEO resigns. And then you don't sell your stock. You say, you know what? I like the t-shirt store stock anyway because the revenue is growing so fast. And then it's like, okay, well, cool, I guess. But then you also see the next quarter the revenue isn't growing fast, and you say, well, I like the t-shirt stock for the long term. It's like you keep changing your mind, and it's the worst thing a trader can do. It's sometimes called thesis drift in the industry. Thesis drift. So with thesis drift, you have a big risk of just constantly wanting to prove that you're right because you don't want to admit. And this could be psychologically, it's a really small market cap. I'm not going to look at this one. This could be psychologically, you could be aware of it, or it could be subconscious. And it could be one of these things where you just kind of don't want to admit you're wrong. So you keep reinforcing what you believe, and or what you think you believe. So anyway, it's kind of a terrible thing to end up doing. And it's how, like I said, most investors and traders make big mistakes that way. If you're wrong, either because of the price, but if you're wrong especially because the reason that you've invested has changed, you just got to get out as soon as possible. You know, and you can't, it's sort of like poker. Like if you get dealt, let's say you get dealt 2 sevens in poker, and the guy next to you think he has 2 aces, and you're pretty sure because he goes all in, and you fold. And then the board ends up being 7, 7, king, 3, 4. You said, oh my God, I should never have folded. I would have had 4 sevens. I would have beaten him. I would have taken all his money. Well, it's still a bad bet, right? So you're not supposed to sort of sit there and say, well, I should have stayed in after the fact. If things changed, it's time to change your investment. And then if it goes up or down, whatever, like, that's something separate. You know, but if the reason you're in has changed, it's time to change your investment. You know, and that's something that seems really simple, but it's very hard to do. If you've ever traded, I think you know what I'm talking about, where it's really difficult emotionally to come to grips with being wrong. It's like one of the most painful human, it's like innate from our basic human experience. All right, so we got this price. Oh, and I've uploaded, if you want to go find that Microsoft model, let me upload it real quick to GitHub. Here. Let me save this first real quick. It's mentally difficult for me to have a open open dialog box. All right, so CD code, CD models, git Microsoft edition. Okay, push. Cool. Okay, so you should be able to see this on GitHub. If you guys don't use GitHub, it's for programmers, but it's really a file version control system, so you can do quite a bit on there. See which repo this is in models, which is a brand new. There we go. All right, so you can get this at github.com/martinscrally/models. So there's only one model there, but I'm going to put all of them there. There are going to be hundreds of models in here, so you can add, remove. You can change the model. If you learn how to use this, there's a ton of ways to sort of change up the model and should have made that locally, but regardless. There's a lot of tools with GitHub, but again, it's fairly intricate and sophisticated tool. Why am I sharing all this for free? Well, I'm glad you asked that. When I was accused of being the most hated man in America by the media, and I had my character assassinated by people who prey on any story they can to get clicks. It's my pleasure to sort of show people, for example, there's this story where it was called The Farmer Bro, and this came from Axios, I think, and I never, it was a funny story because there was a photo of me, and I don't think anybody really knows this story. There's a photo of me, let me see here. It was a photo of me in a Lacoste shirt. If you know anything about Lacoste polo shirts, they're not, was it Axios? I think it was. Maybe it was a different journal. Let's see. But anyway, it was a photo of me in a Lacoste, let me find the photo actually. Okay. Let me change the date. Let me just start over again. So anyways, this photo of me in basically this like funny shirt. And let's see the images. Oh man, it was just a polo shirt. There it is. All right. Yeah, this is all false as well. But anyway, where's that photo? There it is. So this is the photo I took on my Twitter. And this is where the term Pharma Bro came from. This is our office. And I don't wear sunglasses and I don't wear gaudy watches, but I found one and I was wearing this shirt and I put this video of Flo Rida up on here. And there was a joke that we had that was basically it was about some stock trade we made. And I was doing it for my friends and I put it on my Twitter where I had almost no views on my Twitter because I wasn't the Farmer Bro yet. And of course I look like kind of like a frat bro, right? I kind of look like a douchey jerk, a privileged white man, as they say, a cis hetero white scumbag. And so, you know, they basically said, oh, this guy's Farmer Bro. Because, you know, there's another insult called Tech Bro. Let's see if there's a Tech Bro thing. What does a tech bro look like? Something like that? I don't know. More like this, right? Going on a date with a tech bro. Here's more tech bros. And the whole idea is that these tech bros are D-bags. So they called me farmer bro because look, I look like a D-bag. Well, I did these streams and then I started streaming a lot and people said, why are you streaming? You know, this is crazy. And I did years of streams because I wanted to combat this image of me being a quote-unquote farmer bro. I've never been in a fraternity. I've, you know, the least I'm a computer geek. I'm not a bro of any kind. So to me, it was a nice way to sort of like show a different, not a different side of me, but show the real me. Because that photo, again, was supposed to be a joke, but it was the only photo that media could kind of find right away. And they were like, oh, look at this asshole. You know, and it sort of contributed to my, this media firestorm. I had raised drug prices many, many times before. There was always a good explanation for it. But in this case, it was, you know, the image was more than enough. So anyway, just a funny, so I've been having fun as well. I mean, when I started streaming, I was mostly trying to change my image or change the perception of me. And then I ended up having a lot of fun. So to me, it was just great. So I'm building this model from scratch. These are the 6 questions I ask of every company I look at immediately, private, public, any company. These are the 6 things. I'm going to explain them all in a second. I'm going to get some water first. And I'll be right back. Give me literally 30 seconds. You can time me. Alright, back. Hopefully that was not worse than 30 seconds. Ow! What's up, Lauren? Miss you. Love you. Alright. So we're going to look into Google, sometimes called Alphabet. So their stock price is the first thing to look at. And I don't say, when I say look, I really mean jot down and analyze. Maybe analyze isn't even the right term, but scrutinize, I don't know. And so anyway, the first 6 things I look at, and sometimes this is called the capital structure. It's one way to look at it. So there's some kind of share price, even in private companies. And then there's shares outstanding. So how many shares is the company divided into, right? That's what's your share of the company. Well, let's take a look at Google. And so I just go to Google, and then I would type the company's name, which in this case is actually Google. Maybe it's Alphabet. And I would say Alphabet Investor Relations. And that's kind of how I got to this website. All right, so I'm at the Investor Relations website. And I'm looking for shares outstanding or shares in general. It's usually in the income statement towards the bottom. It's also sometimes in the balance sheet, as you can see. So here it is, 682 million shares outstanding. So I just type that down. And I note what date it's for. So this is, oh, I'm looking at the wrong one. This is the column for 2021. So let's look at the column for 2022, more recent. So it's 667,551. And I just type Q122. All right. So there are 667 million shares of Google, right? So to buy one share, you need to pay $2,000 roughly. But if you bought one share, right? So here's your, zoom in here. Here's your share. You bought one share, right? Well, the amount of shares, all the shares, right? The 667,551,000. So you own 1 over, right? 1 over 667 million shares. Not much, right? You don't own much of that company, do you? And how much did you pay? Well, we can multiply it by the price. So you paid $2,200, right? Well, how much would it cost to buy all of them? Well, how do we figure that out? Well, if it costs me 2208, 2207.85 to buy one share, well, what if I bought two shares? Okay, that's about $4,000. Well, how about 10 shares? That's $22,000. That's about the price of what? What can you buy for 22,000? I was going to say new car, but I don't think you can even buy a new car for that. $22,000. Maybe like an iced out diamond necklace, something like that. Maybe a nice dinner at Per Se here in New York, dinner for four. I don't know. Maybe the bed that my cat sleeps in, Trashy the cat, Trashy's bed, probably around $22,000. All right, I'm just kidding about that. Trashy sleeps in a $20 bed, but it's comfy. All right, how about for 100 shares? 100 shares would be $220,000. I was going to say that could buy you a house, but not really. Not New York, at least. So for $220,000, what can you buy? What can you buy? What costs around $220,000? What would you say? A really, really expensive diamond necklace? I don't know. Engagement ring for Lauren? Something. Who knows? All right, how about 1,000? 1,000 shares. All right, $2 million. Now that's a half decent apartment in New York. But what percentage of Google would you own? So you can buy 1,000 shares of Google for 2.2 million, or you can buy a new apartment in New York City, right? But what percentage of Google would you own? You can actually calculate this. 1,000 divided by 667 million. Oh boy. What percentage is that? It's giving me this weird thing. All right, well, it's not 1%. Is it 0.1%? Nope. Is it 0.01%? Nope. Is it 3 decimals? 4? It looks like it's 4 decimals. So you would own 0.00015% of Google, even though you're spending $2 million. So how much would you have to spend to own 1%? Well, let's keep going. You bought 10,000 shares, $22 million. Well, that's a lot. That's probably the most expensive house in almost every city. Only for, say, like New York City, maybe LA, a couple cities, that you'd have the most expensive home. $22 million. For most people, that's enough to retire. That's only just 10,000 shares of Google. You might get 10,000 shares of Google just for working there for a couple years. It's a hell of a company to work for, isn't it? They just give out stock for their employees. Let's say you had 100,000 shares of Google. Maybe you're an important executive there. Maybe you are a big hedge fund and you're buying Google stock. $220 million. That's almost enough to buy a hockey team. Definitely the most expensive home of all time. Most expensive art of all time. But look at the percentage. Your stake of Google is still close to nothing. 0.01%. It's not even 1%. It's not even close to 1%. Let's say you had 1 million shares of Google. You were good friends with the CEO of Google. Maybe you're a top superstar at Google. They gave you 1 million shares of stock. That would cost you $2.2 billion. Right? And you still don't even own 1% of the company. 0.15. Well, maybe let's try 5 million shares. Well, that's $11 billion. That would put you on the Forbes list. Right? You'd be in the top richest people in the world. And you wouldn't be towards the bottom. You'd be like in the middle or towards the top end of the list. And you still don't even own 1% of Google. So anyway, the point here is that there's something called market cap. And market cap is the stock price times all the shares. So the reason these percentages are so small is because Google is so big. It's a $1.5 billion, $1.5 trillion company. So if you multiply the stock price by all the shares,